Bitcoin digital gold. Imagine a world where your money isn't subject to the whims of central banks and governments. Enter Bitcoin, the first decentralized digital currency, often celebrated as sound money. Why? Because Bitcoin is more than just a medium of exchange. It's a rock-solid store of value. Unlike traditional fiat currencies that can be printed at will and manipulated by central authorities, Bitcoin operates on a decentralized network. This means no single entity can control its supply or value, offering unprecedented financial freedom and security. As a passionate Bitcoin investor, I've witnessed firsthand the power of holding Bitcoin as a store of value. During the last bull run, I strategically bought low in the bear market and sold high near the cycle's peak, reaping substantial rewards. This time around, the landscape is different. We're seeing governments, hedge funds, banks, and corporations recognizing Bitcoin's potential as a store of value. I'm here to show you why I firmly believe Bitcoin is sound money and holds the key to financial freedom in the near future. Together, let's navigate this exciting journey and unlock the limitless possibilities that Bitcoin offers. Sound money is characterized by its scarcity, durability, portability, divisibility, and fungibility. Bitcoin meets all these criteria. With a fixed supply of 21 million coins, Bitcoin is inherently scarce, making it resistant to inflation. Its decentralized nature ensures that it cannot be debased or manipulated by governments or financial institutions. This makes Bitcoin a stable store of value, unlike fiat currencies that can be printed at will, leading to inflation and loss of purchasing power. Individual freedom. Bitcoin provides individuals with financial sovereignty, allowing them to control their own money without relying on intermediaries. Traditional banking systems often come with restrictions, fees, and surveillance. Bitcoin, on the other hand, offers a peer-to-peer network where transactions are verified by a decentralized network of nodes, ensuring privacy and security. This empowers individuals to transact freely, without the need for permission from banks or governments. Global accessibility. Bitcoin is accessible to anyone with an internet connection, making it a global currency that transcends borders. This is particularly beneficial for individuals in countries with unstable currencies or restrictive financial systems. Bitcoin allows them to store value and engage in international trade without the need for traditional banking infrastructure. Innovation and adoption. The rise of Bitcoin has spurred innovation in the financial sector, leading to the development of new technologies and financial products. Decentralized finance, DeFi platforms, non-fungible tokens, NFTs, and other blockchain-based solutions are transforming the way we interact with money and assets. As adoption grows, Bitcoin continues to pave the way for a more inclusive and decentralized financial system. Empowering individuals with financial sovereignty, Bitcoin is reshaping the way we think about money and its role in society. Supply and value. Bitcoin's supply is capped at 21 million coins, making it a deflationary asset. The supply is controlled through a process called mining, where new Bitcoins are introduced into circulation at a decreasing rate. This scarcity is a significant factor in Bitcoin's value, as it mimics the principles of precious metals like gold. Let's be honest, we can always find more gold, but only so much Bitcoin will ever exist. Tokenization and burning. Tokenization refers to the process of representing Bitcoin on other blockchains, allowing it to interact with decentralized applications, dApps, and enhancing its utility. This makes Bitcoin more accessible and programmable, expanding its use cases beyond simple transactions. Token burning is another factor influencing Bitcoin's value. By permanently removing tokens from circulation, the overall supply decreases, potentially increasing the value of the remaining tokens due to scarcity. While Bitcoin itself does not undergo token burning, similar practices in other cryptocurrencies can impact Bitcoin's market dynamics. Let's discuss some of the companies that hold Bitcoin and how much. We can start with MicroStrategy acquiring 51,780 BTC for $4.6 billion. This brings their holdings to a staggering 331,200 BTC, valued at nearly $30 billion. Michael Saylor, if you did not know the name, is the executive chairman and is the largest Bitcoin holder at this time. It seems he is trying to maximize shareholder value while leveraging long-term growth potential. Mara Holdings, formerly Marathon Digital, is also strategically increasing their holdings, leveraging Bitcoin, repurchasing existing debt, and expanding its Bitcoin reserves. If that's not impressive, AI firm Genius Group acquired Bitcoin. CEO Roger Hamilton seems to be exploring Bitcoin as a treasury asset. President Trump is also trying to accelerate the adoption of this asset class. Who can forget the most famous of them all, the multinational investment company BlackRock, the world's largest asset manager. With approval by the SEC for Bitcoin ETF, BlackRock launched its eShares Bitcoin Trust. We also have the US government, China, UK, El Salvador, with a few Bitcoin whales such as the Winklevoss twins and Tim Draper, for example. But let's be honest, Bitcoin and crypto in general is still a smaller asset class compared to other markets. Despite its potential for high returns, Bitcoin remains a highly volatile and speculative asset class that carries significant risks. Its price is subject to extreme fluctuations influenced by market sentiment, regulatory changes, and technological developments. Additionally, the lack of regulatory oversight and the prevalence of cyber threats make Bitcoin investments vulnerable to fraud, hacking, and other malicious activities. The absence of consumer protections and the irreversible nature of transactions further exacerbate the risks. As a relatively new and evolving asset, Bitcoin's future remains uncertain, and investors must be cautious and thoroughly informed before committing their funds to this digital currency. Just remember, you do not have to own a lot of Bitcoin, but something is better than nothing. A little in a couple of years can go a long way. I hope you like and subscribe if you like this material. I will also discuss the market in general and altcoins, which happen to be my specialty.